Over the last couple of weeks, a lot of headline news coming out about Schwab and Fidelity and E-Trade and all these other brokerage firms lowering their commissions to zero, right? You can now just trade your brains out for free. Now, that's not necessarily a good thing. Commissions at least applied a little bit of a speed break on people and what they did with their money, but now that's kind of been taken away. But I did want to address one thing. There is no such thing as a free lunch, and this is the one thing that people we're getting a ton of emails at our office, right? It's like, hey, are we getting free trades now? It's like, yes, you are. Yes, all of our clients now have free trades across both of our platforms, so everybody gets free trades. And it all sounds great on the surface. And yes, you are saving some money on transaction costs, et cetera. So that's actually a good thing. There's nothing wrong with that. But don't think it's free, right? These companies are not in the business of giving you free stuff. They are trying to attract more business. They are a business. They sell product. And this is what we were talking about the other day, is that when you turn on CNBC, you turn on Fox Business, or you listen to the evening news and they talk about, oh, the market's doing this. You just need to be invested. If you're not invested, you're missing out. Just remember that all these people are selling you a product. They have a reason to be optimistic all the time. They sell you a product, and the more demand they have for product, whether it's an exchange traded fund or some opportunity, whatever it is, they're going to create a product to fill that need. That's what these firms do. And it's a business. It's a huge business. It's a multi-trillion-dollar business these companies combined all make. And it's a very, very lucrative business. But it's not free to you. What do I mean by that? What happens with free trading, et cetera, is that there are two ways that companies are compensated for executing transactions. And neither one are free to you. The goal of free trades is to garner more business. If I can provide something that is less costly to you, I'm going to attract your business. So you're at one firm and they don't give you free trades, and now you can move over to Schwab or Fidelity or TD Ameritrade, et cetera. Now you can get free trading there. So you move thinking you're going to save money. The reality is that your execution is not going to be as good as it was before. And what I mean by that is that 2 or 3 things happen along the way for these companies to make money. Again, let's not forget the profit motive. There's a profit motive to all of these things. And so why would a company do this? Why would they give you something for free? They're not giving you something for free. What they want is your business. The more that you transact, the more order flow there is. And that order flow is sold for a profit. And when that order flow is moved and executed, the companies that are executing that order flow capture a piece of that flow. So they're making money from it. And in most cases, they're making more than the $4.95 they were charging you for trade. This is actually more lucrative for them in many cases. The second thing they do is they sell your data to hedge funds. Robinhood, the online trading app, as an example, when you trade for free on Robinhood, they take your data and they sell it to Citadel, the hedge fund. That way, Citadel has the opportunity to trade in front of you and to take advantage of your trade. So not only is Robinhood making money from the function of selling your data to Citadel, Citadel is making money by getting better execution than you, which is, in other words, costing you money because you're not getting as good of an execution. This all happens at the speed of light now. I mean, this is just so quick, you don't even imagine it because of computers and technology today. But you're actually losing money in cases. So the cost to you, while you may think something is free, it's not. And this is part and parcel of kind of what's happened within our financial system. And again, we talk about the issues of wealth disparity and the wealth gaps, and the people on Wall Street make all this money and everybody else doesn't. And this is because of the developments and changes of technology and the implementation of technology and the fact that we can trade faster and quicker. And we now have algorithms and robots that are doing all this. But, and again, this doesn't benefit you as much as other methods. Over the last 20 years, we've changed a lot of things. We went to pricing everything in pennies rather than in fractions. We used to, the stock market, if you're actually, as old as I am, back in the day, in the last century, just to kind of put a fine point on how old I am now. But in the last century, we used to price things in fractions. So if you bought a share of ExxonMobil, you bought it at $50 and an eighth, or $50 and a half, or $50 and 3/4. And so everything was marked in eighths. And that's how you actually bought and sold things. Well, in order to get better, what they call spreads, the differentials between the buyer and the seller, we went to doing pennies after 2000. And so now you actually buy in pennies. So $50.01, $50.02, 10 cents, whatever. But that closed those spreads, which again, what companies needed to do was make up for the loss of revenue. And so we started implementing, okay, great. How can we do this faster? How can we capture more of the transaction between all these individuals that are trading online? And that's where this idea of paying for order flow and selling data and doing all this other stuff, all these other sources of revenue are now coming into these companies off of you. So, and this includes your 401k plan. This includes your IRA, your SEP IRA, whatever type of account that you've got savings in. This is what's kind of going on behind the scenes. And so the point is that don't think that free is free. There's a cost to you. Sometimes paying for something is better. Sometimes paying for a service and understanding what you're actually paying for and getting is a better way to go. And maybe someday we'll actually kind of move back to this idea. I doubt it, but it's absolutely just simply too lucrative for Wall Street not to do it this way. Sometimes paying for something is a much more important aspect of how we conduct business in the United States, because it's a much clearer system. When we start obfuscating things to make things appear cheaper, in a lot of cases, the consumer winds up getting taken advantage of. And this is not just the Wall Street issue because it's new, it's relevant, it's here. This kind of goes across the entire platform of how we consume and how we operate within the economy. As consumers, we're always chasing the cheapest price. Sometimes chasing the cheapest price doesn't always work out to our advantage. Yes, we want cheaper televisions. So what do? We export labor to other countries who can manufacture those products cheaper. We import them back into the U.S. So we export inflation and we import deflation, which isn't all that good technically, because while we want cheaper products and we want to own more of these cheaper products, it's also damaging the productivity in the United States. It's also reducing our manufacturing in the United States. There are negative consequences of always chasing the cheaper price. And these are the things that we have to balance between, as consumers and as citizens of the country and as voters in elections. We need to balance our decision making and the policies that we want for the greater good of the economy versus always just what is the greater good for me. And a lot of what's happened in the economy over the course of the last several years, and again, people are worried about Social Security. They're worried about, are they going to be able to get Social Security? Social Security is going to have to start cutting benefits in 2025 if we don't start changing the dynamics of how Social Security works. But we can't fix that because any politician that runs on that type of platform saying, hey, I'm going to fix Social Security, and this is what I'm going to do to fix it. Everybody says, okay, well, as long as you don't cut my Social Security, you can cut everybody else's, just not mine. Because of the fact we're always trying to protect the me rather than the we wind up in this situation of where we are. So my point is that simply sometimes free isn't free, and free isn't always the best thing economically for the citizenship as a whole. Be right back after the break.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.